Hemang Jani as well joins in on the show to talk about which way he thinks the markets are headed. Hemang, touch wood to the market rebound. It's been pretty steady the last 3 days and seems like we're headed in for some more of a push today. What do you think is going to actually chug along the market higher? Because in the last 3 days, one has seen very distinct move. You can't really pinpoint one particular sectoral leadership other than perhaps NBFCs.
Yeah, good morning, Aisha. I think it's a good thing because having seen a big grind over the last 4 months, what you're seeing right now is that while the banking and the bank nifty is showing leadership of this rally, you're also seeing a very good breadth and participation come through of from the broader market, be it mid cap indices and stocks. And actually, the mid cap stocks are showing a much better upside, in the last 2 or 3 days. So I do think that the overall situation is quite conducive for a base formation and could really give you a some sort of a framework or a structure on which you can build a bigger rally, and the leadership can come from multiple themes or sectors, be it banks and financials. We had seen a bit of a recovery in the capital market related plays which were so badly beaten down. At the same time, the cap goods, the cement. So I think it would be difficult to pinpoint a specific theme as such. But overall, we do think that this market has a very, good foundation in place.
Right, good foundation in place. A very good morning to you, Hemang. Cheryl also joining the conversation. I just wanted to understand, yes, there are a lot of sectors, and if you look at the way how the market has changed over the last 2 weeks and now, because 2 weeks ago we couldn't find a safe haven or safe pocket in the market. Now there are actually opportunities galore. But if you have to actually pinpoint that one sector, apart from banks, which one would it be that you think you can actually look at it and go all out in it right now?
So I think some of the mid cap cap goods plays, something like Kirloskar oil engine or Kirloskar pneumatic, KSB pumps, which were down almost about what 40-50% from the top, and for no real concerns. Of course, some of these companies had a bit of a slowdown, and their previous quarterly numbers were not that great. But when you look at the companies, their valuations, and when you look at their growth outlook, I do think that this pocket of capital goods and oil engines, I definitely think that there is a good amount of upside, and particularly when you look at something like Cummins, which had corrected for no real reason. The quarterly numbers were so good, and the overall outlook that the company has put out is extremely good at about 20% kind of a growth. So I think this is one pocket where I am absolutely confident to get into it even at this point of time.
All right, Hemang, the other big news that we have been tracking today morning is, of course, the Adani Group's foray into the cables and wire segment. A lot of is what is happening in this particular segment. Just a while back, we have seen Ultratech coming out with a big capex plan, and there was a bit of a fear with the investors in some of its peers. But help us understand, what is your read through with Adani's group foray into the cables and wires segment, and how is that expected to impact the overall sentiment as well as the competitive intensity?
So I'm also a bit surprised to why all these biggies are trying to enter into this wire and cable segment. It's not as if that it's going to be a big thing in the overall scheme of things for companies like Ultratech or Adani Group. As such, no doubt there is a fair bit of growth which is there, and there is a certain degree of margin, and of course the consolidation could be a big factor because this is one sector or space where you see a big unorganized segment overall. So I think for incumbents, obviously not great news, but we have to remember that the reaction which was there when Ultratech announced their plans to foray into this time the reaction may not be that big. It could be just a knee jerk thing. Overall, we do like Polycab in particular because we think that even if these new guys come in, it's going to take quite a bit of time, and these stocks have been doing extremely well operationally. The stock prices are down, but they are doing pretty well. And I don't see any headwinds or challenges, at least from a growth perspective, over the next couple of years. So if I see any correction in names like Polycab, I would definitely go out and buy.
Stock in focus today, Hemang, is Avenue Supermarts, because the company has come out with an announcement saying that they're going to be investing 175 crores in their e-commerce arm, DMart Ready. But Hemang, when we look at this particular segment of DMart, then well, DMart Ready has its presence across, but they were not that successful given the intensity or given the capital intensive nature of the business. But now when the company is planning to go big, or rather make fresh investments into their online platform, and along with that the competition is seen to be heating up. Give us your sense, how do you see the stock headed, and what's your take after this announcement?
I think DMart, given the way this entire quick commerce has panned out, has underperformed big time. And while at the price point level and at the popularity level, people do want to go out there and do the shopping with DMart. But I think in the new scheme of things, things can be far more disruptive for a player like DMart. While they had a a DMart ready kind of a concept, wherein you can order from your mobile app and you can pick up your stuff, I don't think that was good enough to really counter the kind of offering that we had from this quick commerce people. So if they really choose to invest heavily into this, I think it's going to be some sort of a cash burn for them, and it will take a much longer time to see the profitability come through. So I'm not too positive on DMart at this point of time. I would rather look for the players like Zomato or Swiggy, where you see a much better visibility, at least for next couple of years.
Hemang, in the lieu of the extreme heat wave already in the country in major parts, including Mumbai as well, do you think a tactical play could be some of these white good companies? I mean, we've got a couple of brokerages actually upgrading Voltas owing to this, peak summer demand.
Oh, absolutely. I think typically we have seen over the many years that when you have the start of the summer, some of these AC companies tend to do well. More so this time because there is an early summer which is set in, and also the fact that the stocks had corrected quite a bit. You look at Voltas, Blue Star, they also had corrected quite a lot in the last 4 months. Of course, you're seeing a bit of a rebound. But I do think that both fundamentally as well as a tactical play, this is going to be a very good theme to look at. When you look at the management interactions that your channel itself had with Blue Star and Voltas, they are sounding far more confident about their growth. Particularly Blue Star, I think, is looking at almost about 30% kind of a growth. Also, at the same time, some of the AC manufacturers on the cram side, something like PG Electroplast, also could be a good interesting play, because you're seeing a very significant demand coming from the entire white goods space, and the order visibility, growth visibility for those players also is looking quite good.
The other segment that I want to focus in on is autos. And a bunch of brokerages, Hemang, have also sort of raised their red flags and cautioning on the auto sector right now. They're saying that there is a downside risk to the EPS estimates. They're saying that there are high probabilities of downgrades to the FY26 volume estimates across the auto pack. And, the key reason they're saying is that with metal prices now inching up, margins also have a downside risk. What are your thoughts on how auto should be treated right now, and whether this is really the one space after a significant market correction that you would want to be in to try and catch up on the rebound?
Aisha, I think overall, yes, there is going to be a bit of a risk of slowdown and bit of a, margin pressure also. But what we must understand is that certain pockets within the auto theme could really display very good growth. Case in point being TVS, like in the recent quarter, their numbers were much better than Hero Motors or Bajaj. And I do think that because their portfolio is more lined up towards electric vehicles, the smaller two-wheelers, they could do much better than the other two players. At the same time, Mahindra has been one of the best performing names. Even their EV launch has been so successful, but was shadowed by the possible entry of Tesla. And I don't think there is going to be any material impact as such. And on the core business, both tractor as well as the automotive side, Mahindra is doing exceptionally well. So I would go with some of these names, but yes, not too positive on the names like Hyundai or Maruti and some of the other two-wheeler names at this point.
All right. Since you were just talking about the summer and the heat wave that we might experience, and already some parts in the country are undergoing that, give us some sense on the power space as well, because that's a connected sector. And what we are understanding from the reports, they are suggesting that it's not just the demand that is holding up and is expected to surge from here on, but even the pricing power is back and the prices are stable right now. Give us some sense that within the power space, what's been your read through as well as any of your top bets?
Typically, you do experience much better growth for the power generating companies, because the demand typically tends to pick up during the summer months. And these stocks also have corrected in the last 4 months along with the market. So I do like some of the names like Tata Power, NTPC, maybe some of the other. I have already touched upon the power generating companies, the engine companies like Cummins and Kirloskar Oil. So I do think that Tata Power and NTPC are relatively better placed, because apart from the core power business, they also have a significant investment in the green energy, in the renewable part, where there is going to be a good amount of excitement with growth being there. Definitely, I think next at least for 3 to 4 months perspective, the operational performance of these companies would be very good.
Let's bring out the stock price of Paytm. Motilal Oswal has come out with a very interesting note this morning, which we were flagging off earlier as well. They're talking about as to how their merchant business is gaining traction. They're saying that they estimate the EBITDA to achieve break-even by FY27. The contribution margin is going to remain steady, according to them, at 57% by FY27. They're saying that the reduction in capex, depreciation expenses, along with strong cost control, should help deliver Paytm a positive adjusted EBITDA by the Q4 of FY25. However, they remain watchful on the challenging macro environment and traction in the financial distribution business in the near term. UPI market share is something that they're keeping on their radar in any case. Hemang, what's the sense that you're getting about Paytm? It lifted off from those lows, but it's been stuck around the 760 range for quite some time now.
So, Aisha, operationally, company seems to be doing much better after that, big shocker that we had maybe a couple of years back. And on most of the parameters, whether you look at UPI, their, GMV, flows and the traction, all of that is looking quite interesting. The only thing is that one is not really sure whether you will see, some big, companies getting into this, something like a Bharti or a Jio or any other company, maybe Adani Group. So that part is something that is not very clear. If you see a big investor coming into the company in the near term, that could be a very big trigger and a re-rating, for names like Paytm. Otherwise, yes, from a pure platform place, this could be an interesting stock to look at, because you have so much to offer in terms of companies when it comes to quick commerce or food delivery. But fintechs, you don't have very established player as such. So I think from that perspective, Paytm does look attractive.
Let's talk about the aviation space in depth. Also, you had the Indigo analyst meet, and also, in fact, the commentary coming in from Indigo on the way forward, Hemang, and they're pretty positive. You have brokerages this morning that have given thumbs up to Indigo, saying that yes, looks like it is headed for brighter skies going ahead. What's your take on Indigo as well as SpiceJet?
I think Indigo has been the most outlier or outperforming stock in the last few months. It's almost close to now 5,000. So absolutely no doubt on that. I think operationally things are incrementally looking good, both in terms of passenger traffic. The way they have actually moved into international arena, and the way they have launched the international flights, and their market share on the international side is now at 20%, which is very significant. So I do think that Interglobe could be one of the best performing stocks in 2025 and beyond. But the only thing is that the stock has run up, so I would be more comfortable entering into it if there is a mild correction of about 3 to 4%. But as a core portfolio stock, extremely positive. About SpiceJet, I think a lot of hopes have been there about this being there at a low valuation, but company is yet to display any meaningful progress on their offerings or financial performance. So if somebody wants to have a very small allocation, it's a different story, but not too comfortable with the current state of things.
Interesting. Hemang, always good to have you on the show. Thanks for your time as always.
If you like this video, then like, share and subscribe to ET Now.